All right. For those of you not aware, Fuzzy will not be here today, so I'm going to go ahead and take the lead and answer some of your questions. If you have questions for me today, please post it in the chat section or speak up. We'd love to hear from you, so I'm not talking the whole time. First, a brief update on the stealth features. A couple days ago, we made the latest release of BitShares with a hard fork scheduled for next Tuesday. This release has a whole lot of fixes and improvements, as well as implementing all the necessary stuff for fee-backed asset for stealth. So of particular interest to traders and out there, it's very similar to the Polynex API that has been rolled out. So this release lays the foundation for an upcoming user interface release to support all of the stealth features. I just heard from Valentin today that he has a working user interface for doing stealth transfers. There's a few extra places he needs to check to make sure that everything's working. So he's just doing testing right now to make sure it's fully robust. And the completion of the history. The stealth transaction history has to be handled in a slightly different way than the transaction history that we use for everything else. Primarily because it can't be indexed using the same way that we index all other transactions because it's stealth. So we suspect that we'll have a beta of the new GUI with stealth transactions out in the next week for everyone to play with. We'll get some testing on that user interface, and then assuming everything works as we would like, we'll roll it out officially for OpenLedger. So I'm pretty pleased with the progress they've made there. I recognize that it's a week or so behind schedule of what we had originally intended, but it appears all the pieces are in place to enable users to transact with stealth by the end of this month. So that's the update there. All right, the next thing I'd like to discuss is the free transactions as implemented by Abit. He's done a great job taking the initiative to implement the feature. He implemented a version that should get us 90% there using coin days and witness set parameters to, or I guess committee set parameters to specify a conversion between coin days and BTS for the purposes of paying fees only. This means you can still pay fees the old way if you haven't accumulated the coin days, or if you accumulate the necessary coin days, then you can pay some or all of your fee with the coin days you have accumulated. I believe his approach is, last 10% of his approach would be to automatically adjust that ratio. But for all practical purposes, we can offer our users free transactions and let the committee members adjust it periodically based upon price and demand changes in the system. Because we support both fees and rate limit based approach, it means no users will ever have a lack of service. It just means that if the fees aren't adjusted in a timely manner, some people might have to wait longer or pay a fee for immediate service. Either way, it's better than what we have today. So I'm very interested in merging his changes into the code base as part of the next hard fork in the system, which will probably be at least 1 month from now. probably 2 months. We don't want to hard fork too often if it can be helped. So there's that status there. I'm very excited about what that can do for bringing new users to the system who will hold BTS for the purpose of transacting for free. It's really not free transactions. What we're really doing is rewarding people for buying and holding, and rewarding people for taking their shares off of the exchanges and onto our local exchange. It means anyone who wants to provide liquidity in our markets can do so for free, so long as they maintain a reasonable size BitShares balance to compensate the network for their usage. So if you're a whale, you can transact in the marketplace for free. So I believe micropayments will be possible while the network's young. Eventually, they will be rate limited severely if you don't have a large balance. But for now, it's a great way to get new users into the system to try it all out. So I think that's great. The next person I'd like to mention is Roadscape. He recently put a worker proposal up there for funding his block explorer, cryptofresh.com. I am a big fan of his work. I think his website provides the public face. It's what all the passive observers use to check out BitShares. It's what I use whenever I want to know what's going on with voting, and it has all kinds of statistics that are not available in the wallet. Developers like him who have been working for us are invaluable to the long-term success. We should reward them. And so I fully support him. I encourage all proxies to also vote for him. He did work first, ask for money later. ABIT did the same thing. That type of initiative needs to be rewarded. If we don't reward it, then those developers will feel unappreciated and go somewhere else where their efforts are appreciated. So please keep in mind that anytime someone brings resources, whether they bring time or money, they're boosting BitShares. And all those resources, the whole is greater than the sum of the parts. When we all work together, the value of what we produce is greater than our individual contributions. So please support him. So the next thing I would like to talk about and that people have requested is some feedback on Tony K's suggestion of making BitShares only tradable on the DEX and forcing exchanges and anyone else to go through either bid assets or IOU assets. This is a way of saying, let's make BitShares the exclusive asset that we can only trade on our own blockchain. And I think that is it's an interesting idea in that it forces people to use the system. It gets the BitShares off the exchanges, and it adds more liquidity in the market because everyone who wants to get in and out or speculate on BitShares will now be forced to do so through trading on the BitShares exchange itself. I find the approach is simultaneously heavy-handed and would greatly disrupt a large number of users. A lot of the liquidity that BitShares has is from speculators who have money on the exchanges such as Polymex and BTC38, but who are unwilling to provide the same liquidity outside of that environment for the same reason that people don't move to other exchanges. Also, they have bots that are programmed to use their APIs on Poloniex, and they enjoy the instantaneous transfers of buying and selling between all the assets on Poloniex and BTC38. So anything we do to restrict BitShares at this point in time is going to have massive short-term impacts on the liquidity of BitShares, and liquidity is king. Liquidity of BitShares itself is king as far as providing value and collateral for the bit assets we're creating. That said, we need to encourage liquidity in our own markets. And liquidity is something that is not free to provide. It's as valuable, or probably more so, than any worker proposal that we are currently funding. Someone who risks their capital in our markets is getting a relatively small profit if they are successful in their market making, but they're taking large risks. Anything we can do to subsidize liquidity has a leverage effect. We put $1 in, we get $100 of liquidity. That's a very efficient way of amplifying the influence of our limited funds, is to subsidize those who provide liquidity to BitShares. So transaction fees are the opposite of subsidizing liquidity. So that's why I think the first step in bootstrapping is to temporarily remove transaction fees and market fees, and then go to the other extreme and have worker proposals that subsidize market makers in particular markets. And the BitShares stakeholders can vote on these workers to figure out which markets should be subsidized and with how much. So that's my proposal for improving the liquidity on BitShares. First, we make it the cheapest place to trade. Second, we make it the effectively negative fees. If you put your money in our order books and you leave them on our order books and it eventually gets filled, congratulations, you've earned some money. That should dramatically change the risk-reward profile and encourage traders to adopt our platform, because now, in addition to the money that they're making from trading, they're also making money simply because they're trading on our platform. And they're sharing in the long-term success of our platform. So doing something like this in the BitUSD, BitCNY, gold and silver, and BitBTC markets would have a dramatic impact on the liquidity, on the tightness of the peg, on the volume traded there. If we had significant volume on the BitBTC BitShares market, you better believe a lot of people who are currently trading on Poloniex would switch to trading on the internal exchange. There's lots of people in this Mumble session and other participants in the community who are BitShares fans who don't trade on our own exchange because there's not enough liquidity. So think of the magnification impact of paying a little bit to incentivize people to move from Poloniex and BTC38 and other exchanges into the internal exchange. So that is my proposal for short-term roadmap. Liquidity is everything. If we don't get liquidity, then it's going to be slow to grow. And we don't have forever to grow. So I'd like some feedback on that approach, and see what y'all think.
First thing, FA says he likes the idea, and Roadscape is, how can we prevent abuse?
All right. So the way we prevent abuse in the liquidity provision is you require all orders to be on the books for at least a minimum period of time. That might be 1 minute, it might be 5 minutes, it might be an hour. And you only reward orders that get filled within 24 hours. This means anyone who tries to trade with themselves is not guaranteed. They're taking the risk that someone else will take them up on their order. And anyone who tries to be too conservative by placing their order too far away from the current price is unlikely to get filled within 24 hours, which means they're not actually providing liquidity today. They're providing, long-term base support in the market, but they're not providing liquidity on any given day. So, if there is no one else trading in the market, then those people can trade against themselves, but it's a competitive game. If someone puts a buy wall up and hopes someone will match it and no one's trading, someone else will put something right in front of it. And then they'll get the points for the liquidity instead of the other person. So the impact here is to create a very tight market where the parties are constantly fighting to be front of the line so that they can get the reward when there is a legitimate trade. And by given time for participants to see the market and place orders that get in front of the liquidity providers, it means that you can't trade it against yourself unless there is literally no activity in the market. If there's no activity in the market, then we're effectively paying people who are self-dealing interest on the money that they leave on the books waiting for orders to show up. But either way, you're not going to be able to abuse the system. The network has fixed costs. There's a certain amount of money that will be distributed to the people who provide liquidity, proportional to the amount of liquidity they provided. And with that system in place, this works very much like mining. So someone who's self-dealing, well, they're not going to make any more money. They're just going to increase the percent, and everyone has equal opportunity to self-deal, which means it will actually create liquidity and it will create volume. Furthermore, people are rate limited on the rate at which they can transact without having a large balance. So all of these things come together to prevent abuse.
So then the trading pair would have to involve BTS.
The trading pairs would be selected based on workers voting. So if you wanted to subsidize OpenUSD BTS, we could. At the same time, the Open Ledger could subsidize their own assets using the exact same logic. Any asset issuer would have the ability to subsidize liquidity in their market. We would just have workers that would fund the subsidization of liquidity in certain markets. If you subsidize liquidity in BitShares versus BitUSD, that makes it much more appealing for shorts because they have a liquid market they can trade in. And at the end of the day, the increase in people who have their money on the blockchain, who are trading, and who are willing to go short because there's a liquid market that they can easily cover in, or if they do get margin called, there's a lot of market depth to minimize the cost. It makes the whole system more secure, makes the pegs tighter, which makes the whole system much, much more valuable. So like I said, the value added to the network is leveraged by 100 to 1. For every dollar we pay to enhance liquidity, we're adding $100 worth of value to the network. So the knock-on effects, I think, are much larger. It's like the butterfly. We flap a wing, we have a hurricane of liquidity and growth. So that's my mindset there. We want to encourage people to come to BitShares and trade. If they're not trading, then we don't have a market. And we want to encourage traders. And those who come to BitShares and trade provide more value than those who come to BitShares and hold. At least because that's what BitShares is. So let me have a chance to read what everyone has been saying. If anyone would like to ask any questions in the meantime, speak up.
So the hard fork coming up this Tuesday is to get the back-end changes in place in preparation for stealth and fee-backed assets. Is that correct?
Correct.
Regarding Roadscape's CryptoFresh website, that it is fantastic, and I really appreciate his initiative as well. When I was reading his worker proposal, I didn't get a firm commitment that the list of features that he was anticipating adding would be what he was putting forth for the actual proposition. In other words, a little bit open-ended. I still think he needs endorsement anyways, even if it isn't really rock solid in terms of what he's going to deliver specifically. But I would have liked to have seen that tightened up just a little bit more.
Yeah, I'm basically endorsing him because he's already done enough work in the past to justify the worker proposal, even if he doesn't do anything new in the future.
I agree. It's fantastic work, and he's done this all on his own initiative. So yeah, I don't disagree whatsoever. He needs our endorsement for sure for this worker proposal. My only comment really is that if you put a worker proposal out there, it should be something that is I've got this and you get that type of thing. Quid pro quo in terms of give and take. But it's a minor point because I believe his worker proposal needs to be approved anyways, as you say, Bytemaster, from the merits of what he's already done, if nothing else.
No, I mean it's a valid question, and I guess the big thing is I plan to stay agile because things change quick, or a feature comes out and we want certain data without knowing what's going to come up. I would just say the top priorities are if people are excited about the social network experiments, I would really like to experiment with that. The API is a pretty high priority, and then the upcoming features I listed are all kind of either nice to have or important to have. So I would just use my discretion along with community feedback to figure out the priorities for those items.
Sounds fair to me.
I guess I'd like to say that I think the work of this community over the last couple of months has been amazing, or last couple of years. And I know I'm a zero of a presence in the forums and have just been showing up here since like September. And I'd like to ask other people to speak up. I'd love to hear from the proxies. I'd also like to say that as much as I think traders are an important first niche market, I eventually would like to see this become a platform where people who are not interested in trading but just want to earn a living selling the POS systems and getting referral fees and maybe winning some jackpots and just having fun with it. I see that as the really big through moment. And thank all you guys. I think everything is really awesome.
A lot of the systems that we want to do depend upon having the liquidity and the strong market support and market confidence. So liquidity builds confidence, and confidence is has a very powerful impact on everyone else. So if traders have confidence, then everyone else will have confidence. But it's kind of hard to go the other way around. So I agree with you that at the end of the day, point of sale systems and other things on the blockchain, you know, even the social networking stuff that Roadscape talked about on a blockchain, those types of things have huge impact. The prediction markets on the blockchain are also huge. It's just we have to figure out how to incentivize things we want. So I think that's the biggest thing that I'm coming to appreciate is you get what you pay for. If you don't pay for anything, you get nothing. If you pay for hash power, you get tons of hash power. Fuzzy, your cell's echoing. So if you want orders on the books, you need to pay to have orders on the books. The opposite of that is anything you charge for, you get less of. So, eliminating the fees is the first step of incentivizing what we want. We want people to use the network to transact, and the fees were preventing that. A lot of this stuff is actually critical when we're growing, and as we get larger, then we can use our network effect and monopoly, if we are so fortunate, and charge small fees for things to make money. Things we can sell that we could raise money for is the premium names and asset symbols. Charging slightly more for that could have a way of generating revenue. Those are assets that are not based on transaction volume or usage. It's like real estate. You buy it to hold it, to do something with it. And so that's a reasonable thing that we can continue to charge fees on. But until we actually have liquidity on the order of Polynix in our own internal markets, charging any fees is going to hurt its friction. And if we can get negative friction, then we can grow. And once we've got all the liquidity, people will stay for the liquidity, even if we're charging them fees. So that's my take there on where we should go.
Somebody should say huge and wow for Fuzzy. I guess I just did.
So one of the questions on the forum for this full session was about the possibility of BitShares being a side chain for Bitcoin. Yes, it's absolutely possible. It's just a matter of implementing a dynamic multi-sig authority for Bitcoin. And we could probably do something very similar for Ethereum. That's once we figure out the infrastructure for doing that, and it mostly comes down to this, you get a diverse set of people like the witnesses who are because they've got too much to lose in terms of future income and or reputation, and that no one person can steal the funds. And you effectively create a multi-sig exchange, which is extremely secure. And the parties to that multi-sig have to be trusted to automatically roll over all funds anytime the voters change their opinion. And when they do that, then things go smoothly. So as long as there's not a huge turnover where all the witnesses get voted out at once, you are safe. I think we've already accepted as a basic risk to all of BitShares security that the 51% of the witnesses can be implicitly trusted. If they can't be trusted, then our price feeds and everything in BitShares falls apart. So implementing this requires someone who has knowledge of Bitcoin and Ethereum blockchains and their multi-sig solutions, knows how to programmatically generate transactions, monitor the change for activities, and can run a bot to deterministically move money from A to B and automatically sign it. So this is a piece of software that would have to run on all the witness machines. The witnesses would have to simultaneously run a Bitcoin full node in addition to the BitShares full node, and possibly a Ethereum full node if we wanted to go side chains for both. But it effectively extends the state of the BitShares blockchain to include or incorporate the state of the Bitcoin and or Ethereum blockchains. So, and the witnesses are the ones that are basically the oracles that are publishing not just price feed data, but reports to both blockchains, our blockchain and their blockchain, about what the other one's saying. They're the trusted middlemen who, if they all agree, that is the consensus. The people who are most qualified that I know of for implementing such a feature would be block trades. Block trades is already integrated with all of these networks. They already have software that monitors for deposits and withdrawals. Hiring them to modify their existing deposit withdrawal system to be consensus driven would be the shortest path that I know of to implementing this, and it would be an extremely powerful way to secure trading on our system. It would literally be the most secure exchange at that point. I don't know of any other exchange out there that has their deposits and withdrawals both fully automated and distributed across the world.
Didn't you say, Bytemaster, that it would take all witnesses to do this monitoring and double checking and Oracle nature stuff, not just one? So then you propose block trades as one that would be the most competent. But wouldn't we have to have the remaining witnesses also get up to speed and accomplish the same things you just mentioned?
I said block trades would be the one to implement the software that would be run by all the witnesses.
I see. Thanks for that clarification.
Sure. So for those of you who aren't aware, block trades announced this week that they're offering 51% of their shares to foreign investors on U.S. non-Cayman Island citizens. If you're interested, they have posted some financial statements that show how they've been making money, what their current situation is. Check out the forum for more information on that. I think they're an incredibly valuable partner to the BitShares ecosystem. So if we hire them to implement a sidechain for both Ethereum and Bitcoin into BitShares, then the result would make BitShares the most secure, robust way to trade Bitcoin and Ethereum in a trust-free environment. Now we can implement the same process for other blockchains as well. And it would also help improve liquidity. Rather than having open ETH and trade ETH and meta ETH, we would have one blockchain-wide witness secured ETH. And all the liquidity there would be perfectly pegged. And then we can focus on our other things that you can't do multi-sig on, such as USD and CNY and gold and silver, and subsidize those liquidity markets. So that's my vision for how to take BitShares and make it the exchange that people actually want to use.
Didn't outside exchanges get their liquidity by just having one or a small number of trading pairs to begin with, and then adding new ones very slowly? Whereas we're trying to jumpstart the whole damn thing, all these assets all at once.
Yes, focusing on a few trading pairs is huge. I believe the market will naturally select the trading pairs that are most robust. I don't think we should subsidize them all at once. And in fact, I think we should subsidize one and then start subsidizing another. Like do them in turns, like starting an airplane starting one engine at a time instead of starting all the engines at the same time. We can only draw so much current from the worker pool, for those of you who understand the electronics analogy. So yes, you're right. The focusing on one market at a time would be huge. But bridging Bitcoin and Ethereum via side chains through BitShares will do a lot for BitShares. And it really plays to our strengths, which are the exchange that we have. I believe we are the best decentralized exchange interface. If anyone knows of any other blockchain-based exchange that's got a better interface than we have, so Counterparty, Next, or Ethereum, let me know. Because one thing we have is transaction volume, fast confirmation times, things that make us competitive, and we should really play those up. Fast confirmation.
Can you give a really simple example of a sidechain transaction?
So with a sidechain transaction, you would send your Bitcoin to a multi-sig address, which the witnesses will publish as part of the consensus state for BitShares. The witnesses will be observing that address, and when they see a deposit, they will automatically generate a transaction on the BitShares network that will transfer you witness TC, and that will be signed off on by all the witnesses, or I guess the majority of the witnesses. And then you'd be able to trade the witness BTC as a BTC IOU that's fully backed by BTC in the Bitcoin multi-sig address. Then when you'd like to withdraw and go back to Bitcoin, you would publish a transfer with a public memo of the Bitcoin address you would like to have the funds sent to, and you transfer it back to the witnesses. The witnesses would then generate a Bitcoin transaction, sign it, and broadcast it on the Bitcoin network. So all it really is the witnesses being multi-sig on an exchange's deposit funds. And that's effectively all a sidechain is. A sidechain in Bitcoin is just the miners being multi-sig on the state of a sidechain. What's interesting about this is once you have witness BTC can be used as collateral to back a BitUSD backed by Bitcoin, or BitETH backed by Ethereum, or USD backed by Ethereum. So there's all kinds of things that are possible once you have something that. Right now we have the problem that Open USD, Open BTC is viewed as the same, as being equally secure as having money on the exchange. It's like having Polonix BTC. We need to demonstrate that trading on the blockchain actually is more secure and can do things Polonix won't do, like allow unlimited withdrawals and no need for KYC validation because it's completely distributed. And people who want to trade and move lots of money will then come to the BitShares exchange because it offers them the most privacy and the least restrictions and the lowest fees, possibly negative fees. So now I'm still here. I'm just reading the chat discussion, waiting for anyone who has anything to say that we can add to the discussion. So there are some people who have expressed interest in the bond market. I agree a bond market would be incredibly useful. As I said in previous Mumble sessions, to do a reliable bond market where you can guarantee that all loans can be covered requires deep market depth. So doing one than the other is you have to get deep market depth than a bond market. Because we can't do fractional reserve or use credit and go after your other assets if you lose too much money. We can't do those types of things. So all debt, the maximum debt that the system could support is the order depth and all the money on the books. So even if you go to something like Poloniex, you see there's maybe 100 Bitcoin worth of depth at any given time. That would be the maximum amount of debt the system could support. And even then, a lot of that is not anywhere near the current price, which means the effective debt that supports is much less than it appears. So we need to get to the point where we have thousands of Bitcoin on the order books. And if we can get to that point, then a bond market starts to make sense.
I have a question about sidechain. I'm not sure whether this was asked. I wasn't present for a minute or two. Eric Martindale from Blockstream writes something in the sidechain thread that he's sure that this is possible to implement such thing, and since Blockstream seems to work on some sidechains technology, if he's willing to give some advices, maybe it would be good to approach him, especially because he emphasized that he would like to talk with you, Bytemaster, or any other developers from Zenix. So did you contact with him?
We have not contacted him to talk about sidechains. I'll be honest, the thought of sidechains has been in the back of our mind, but not really at the front of our mind, because we've been focused on getting the stealth done. I think we can review their work, and we would certainly talk to them. Someone else also mentioned that we should talk to Open Bazaar, and they asked if we'd create a worker proposal to do that. Obviously, there's lots of things that we could create worker proposals to do, but of the things that we could be doing, anything that doesn't directly impact liquidity, I think should be lower priority. We have a limited budget, and most of that budget, I believe, should be geared toward things that improve liquidity. That's my overall opinion there.
What's next on the table after stealth? Is there like a roadmap? I mean, I'm sorry, I haven't checked the forum much for that, but is the bond market next, or like what is the next paid or almost paid for feature that we're going to have coming?
Free transactions is the next feature. It's already mostly implemented. We just need to test evaluate it and pay ABIT for that. So thank you, ABIT. And after free transactions, subsidized markets would be the next thing that I would suggest should be a high priority. It's a relatively easy thing to implement, doesn't require any changes to the user interface, to make it happen, or minimal changes, maybe just to transaction history. That would be the next thing I would do, and side chains for Bitcoin and Ethereum would be the third thing. So those are the three things that free transactions, subsidized liquidity, side chains, I think will really play to the strengths of BitShares. The other thing that's going to happen sometime in the next couple months is some more exclusive assets on the BitShares network. So I know some projects out there that are pretty exciting, and they'll be trading on BitShares first. So when those things come out, that should also help boost the overall trading on the BitShares platform. Like I said earlier, having an exclusive asset, like, if we were the only place where you could trade Ethereum, well, it'd be huge. So having those types of things is what bootstraps a lot of exchanges and then allows them to branch out into other commonly traded assets. I'd like to see the same thing happen with BitShares, is find a few exciting new projects out there, get them to list on BitShares, and go from there. So that's why I would prefer to do it with other assets rather than making BTS the exclusive asset on our chain.
Dan was telling me, or the block trades guys were telling me that they are soon going to be adding the open.usd and then also open.euro and open.cny very shortly. But USD is coming very, very soon.
Yes, I thought it was already there, but maybe just the internal stuff I've seen floating around getting mixed up with what's been announced. But yes, you're correct. This stuff, if it's not there already, it's going to be very soon.
Right. That's, like Dan Test says there. This is going to be on the bridge. This was important to us when we're working on the point of sale systems, because merchants have expressed a real concern that the money that comes in from the altcoins and smart coins, right now it immediately gets dumped into BTS through the bridge, and they don't want that volatility. Understandably. So open.usd is a great start. So you got to thank Block Trades for that. Let me ask you something. Can I say something real quick? What do you think about the bond market? Do you believe that that's going to help the liquidity of the smart coins as well, the bond market?
Yes, it will help liquidity as a phase 2 booster. Bond markets bring more speculators in, and they put more money on the market. So it will help liquidity. It allows short selling and things like that. But like I said, it's a stage 2 booster rocket. You can't have a bond market without a very liquid initial market.
Yeah, I hear a lot of people complaining about the liquidity, and a lot of people just don't really realize that we're so new still. Liquidity takes a long time, but I'm just kind of trying to pick and choose the best technologies that are out there right now, and hoping that I pick the right one, and that this company or that company doesn't go under and screw over everything that we're working on. And so it's just trying to pick the right ones right now. It's tough.
All right, T-minus 5 minutes. Once call for any questions.
Hey, I was wondering if you had any thoughts on the liquidity event that Noisy was proposing for the 29th.
Yeah, I'll be honest, I haven't looked into it in much detail.
I think the idea was just to encourage trading on a particular pair on a particular day, in the hopes that it would bootstrap liquidity. I'm not...
A money bomb kind of concept where everyone waits to donate to your candidate until a particular day, and then you all trade at once?
It's been described on the Daily Decrypt, so it's been advertised.
Because I'm here, maybe I will describe it very quickly.
So at a certain time, a certain day, everybody's going to trade something. Is that the gist of it?
I'll keep waiting for Noisy to come back, but yeah, it was the what is it? The BTC USD pair? I believe it's the BTC USD pair.
And what's the day and time in GMT?
I think the day is the day is definitely February 29th is the leap year this year, so it's sort of our day out of time. And then I don't know which time, I think all day long, so wherever you are that day, all day. As far as I know, I could be wrong about that.
Roadscape, can I ask you a question about CryptoFresh? How often does it update the totals on the votes?
I know that some of the votes are cached. Well, right now they're cached indefinitely, so I have to add in some cache invalidation. But I've been working towards making sure they're all updated at least once an hour. That's how the ballots report works right now.
Okay. The liquidity event on the 29th sounds like a great initiative. It's a great opportunity for all the traders who want to get in or out to meet at one time, trade hands, rather than having people come and go at random times. So anything you can do that concentrates people to trade during particular points in time will have a much greater impact, because anyone who wants to trade with good liquidity will just wait, and then they all trade at once. They all get better prices around the same time. It has the impact, though, of reducing liquidity outside of that event, because someone who might have traded on the 28th is now going to wait until the 29th. So any of these attempts at shifting things around, you're just stealing money from one day to give it to another day. So I guess there's some value in there being a day where you can get good liquidity, and for people to know that such days are going to happen periodically. But at the same time, it does have the opposite effect of making other days less liquid.
Sorry to change the subject. Can I go back to the bond market thing real quick? I need to know, is there a job description already written up on exactly what needs to be done for the job market? What languages the coders need to know? Just a very detailed, document, like what I usually do for new devs, so they know and I can get proper bids on it and stuff. Is there a document describing this bond market and how to set it up and where to find the docs and everything for it?
The implementation and design of it is only vaguely defined in my head. I haven't even worked through the complete mechanics and written a proper white paper on it. Because it's a challenging problem with lots of details. And a lot of the things that you would traditionally think that you do, it's very hard to. You have to have algorithms that are extremely efficient and that can be done one transaction at a time with relatively little bulk work. You need to make sure that every trade maintains the constraints that all margin positions are still good. So yeah, it's a complicated thing to define the spec. It will probably take at least a week's worth of effort to properly define the spec. And even then, a lot of the details of what you need to do don't come out until you start really getting into the code and looking at what's required. But it's that's the short answer. No, there is no detailed spec. It's challenging. You can't just pick up a detailed spec from something that someone else has implemented. this is a public chain and it has to have 100% guarantee against lenders getting defaulted on. And those are both challenges I don't think have been fully tackled anywhere. It is now 11 o'clock. This Mumble session is officially over. If there's anything else you'd all like to discuss, go ahead. I have got another meeting I've got to go to today. Thank you very much. Thank you everyone for showing up today. Please provide any feedback or discussion about the side chains or liquidity workers. Take that discussion to the forum, voice your support if you like it. If there's something you don't like about it, let's get that aired. In the meantime, please talk to your proxies, get them to vote for workers, and don't be afraid to vote against refund workers in order to get workers in. We need to reward people who are contributing value. Without the developers like Abit and Roadscape and BlockTrades, SVK and CAS, BitShares is dead without these people. Let's make sure we reward them and thank them for their continued contributions. We are paying them much less than the value they're bringing to us. Let's keep that stuff in mind and vote accordingly.
Thank you for your time, Bytemaster.
I will point out that I have heard, people concerned about the impact of inflation on the price. The impact of not inflating also impacts the price, and there are people who sell out of fear that development will stop if we don't continue to fund growth. So just keep in mind that it's not cut and dry that inflation causes the price to fall. Lack of inflation can actually cause the price to grow. Lack of inflation can cause it to fall. And that seems counterintuitive, but it's very, very real that the sum of all contributions is greater than the value of everything combined is greater than the individual contributions. And it's the passion of the individuals here working together that continue to drive things. And we need to continue to reward those who make everything else possible. And so that's all I wanted to say there is proxies, discuss it, think long and hard about it. And even if the price does fall in the short term, it's better in the long term because people are continuing to build. But I think it might have offsetting effects. More people might buy to cancel out the people who want to sell. It's all going to be a wash. People look at, well, what's the future look like for BitShares? And I think the future for BitShares looks very bright in light of the innovations on eliminating fees, the potential for side chains, and the subsidized liquidity in the markets will drive a lot of users, a lot of traders to come and trade on BitShares because they're making more money on BitShares than they can make on any other exchange. And when people do that, they learn about BitShares, and then they realize this is the platform they want to be on. It's free advertising every time someone's actually trading on our blockchain. It's the best kind of advertising we can get because people are basically paying people to try out our system. Come trade with us and make money. So it gets us what we want, which is users, liquidity, and everything else. Growth will come from those two things.